I've been eager to get him on our program when he's
Well,
made
you've
a
been
trip
talking
down
to him a lot, right? Because
Oh,
of the
yeah.
crypto show and prediction
He's on our show
markets
every
and all.
week. I talk to him ahead of our crypto show every week because he's got his hands in everything that we're talking about. And one of the reasons I wanted him to come on with you, Carol, is because you talk about this all the time, about the difference between the technology and the actual cryptocurrencies.
Yeah.
And
Oh, you
what
mean
is
like-
here to stay? Yeah, when it comes to the crypto part of the conversation. That's where I want to start. Dushyant, it's good to have you on the program. Everybody calls you D. We're going to call you D. I want to start with what Carol brings up all the time, and this idea of technology. And when we talk about crypto on our program, a lot of time we're focused on price action, what goes up, what goes down, how big the moves are. You and I have had many conversations about the underlying technology and what this is bringing to financial innovation in the financial ecosystem. You think it's here to stay?
What's the it?
The it is the underlying technology that cryptocurrency brought.
Like blockchain?
Tokenization, blockchain, stablecoins.
Absolutely, Tim. I mean, 26 years, most of my career has been in the intersection of technology and finance. And if I can break it up in a broader context of what's going on over decades, think about the late 90s, the internet. What did that change in finance? It changed the way the UI, UX. It put yellow pages online. It brought the financial advisor, you pick up the phone and place the trade, it brought it online, right? So that was the first wave. Second wave was mobile and cloud, which was about 15 years ago, which basically changed the way we distributed financial products. This is different because this is building on top of that, but even monumentally more important because it promises has the potential to change the way financial products are manufactured. That is the transformational change.
What does that mean?
What does that mean basically is that if you think about the last 100 years, last 50 years of financial services, whether it's, let's keep it simple. There are four major basic functions we have in finance: payments, borrowing and lending, investing, and insurance. Mm-hmm. Those are the four basic activities we do. Everything else is mumbo jumbo on top of that. Those four activities, when you think about the structure of how those activities are executed, are heavily intermediary driven. They're intermediaries as stand-in. New York Stock Exchange for a securities trade, Bank of America for a payments transaction. That intermediary-driven model is potentially could be upended by this blockchain technology.
But the intermediaries provide a very important service for us.
Absolutely.
And that is, I think, to do with trust.
Absolutely, Tim. And this is the crux of it, that we are in a phase in the industry where we can have software eventually replacing some of what trust was provided by intermediaries. Think about it, like you're getting into a Waymo car, trusting your life with software that's driving you. There's no driver sitting in the seat.
I close my eyes.
Thank God.
I'm totally all in.
But it took a while for us to get over that hump.
Took me 30 seconds. That's crazy.
Carol, you're ahead of the curve.
Yeah.
But that's what's happening in finance.
Yeah.
That absolutely, Tim, I'm not saying that bad things are not going to happen when we hand over the driver's seat to software. It's going to happen in finance too. But we are not going back.
Well, bad things happen with bodies that we trust and pay fees to, and there's regulatory oversight, and bad things happen.
Absolutely.
Dare I say the great financial crisis.
Absolutely.
So how does it happen? Is it gradual? I mean, it has been gradual. Is it gradual? And
it's not gradual, actually, if you think about, and I just want to be clear that we're not just talking about blockchain.
Okay.
Because I don't want to be yet another person coming on espousing blockchain.
I get blockchain.
Blockchain is one part of it, but there's a whole lot of other stuff that's happening. Is general technology has reached a point where waves of technology happen. This is the next wave. Blockchain is a very important element of it, and it's most relevant to us in financial services. But it is when blockchain allows products to be structured differently than they have in the past. And that basically means, I'll make it real for us, when you think about traditional financial products, they were stuck in boxes with intermediaries, so you could only do so many things with it. If you want to roll out a new derivative contract, you had to go to a CME, right? We just had perpetual futures, this esoteric derivative instrument that's finally come on shore. 80% of world crypto activity is happening in perpetual futures that were outlawed till about 6 weeks ago. So the rest of the world is not waiting for us to catch up, right? So the rest of the world is moving on. The rest of the world is using stable coins to transfer payments. And if you look at what stable coins has done, that's something we can all relate to. Who can argue with the fact that, do you want to write a check or send money through Venmo? International cross-border transfers, 3 days, $50. Stable coins, instantaneous, pennies.
So then who gets disrupted in this world that you envision? Is it Western Union?
Ironically, if you look at what Western Union is doing, they're rolling out their own stablecoin and they're coming out with a bang.
Okay.
In fact, that's the story here, Tim, very importantly, that the first wave, 2 years ago, I was sitting here, the discussion was about the insurgents versus the incumbents.
And the incumbents have adopted the insurgent technology.
Absolutely. Look at what's happening. I mean, JP Morgan Chase, Jamie Dimon, 10 years ago says Bitcoin is a fraud. Right? He's never retracted that statement, but as of last check, Connexus, which is JP Morgan's digital asset platform, is processing $2 billion in cross-border payments every day.
What does it mean for our everyday life? Like I always joke when we just talk about crypto, I have yet to pay my mortgage with cryptocurrencies. I don't go buy eggs and milk with cryptocurrencies. But how does it impact kind of our everyday life?
Carol, actually, it's not about cryptocurrencies. Cryptocurrency was simply the first manifestation and utilization of blockchain.
Yeah.
It's about basically using software to intermediate between transactions. That's why I went, keep it simple.
Yeah.
I need to pay Tim. In the past, I would not pay you directly because there was counterparty exposure, the risk that either of us would renege on that payment. So we did that through SWIFT for cross-border, through ACH, FedWire for domestic. The first wave of how that moved was we went from that to PayPal and Venmo 10, 15, 20 years ago. This is the next wave of that interaction. Without an intermediary software intermediating between us would mean we don't need to have even Venmo to send payments to each other. I won't get into the technical details, but it's going to be your software agent interacting with mine, and neither of us can renege on that. That means technically we don't need an intermediary.
But then where is the security? Do we just have to believe the system is secure?
It's software, Carol. I mean, where is the security when you sit in a Waymo and expect a software agent to drive you or your kids? To some extent, you're expecting software is going to work, and software oftentimes is not going to work. It's not infallible, right? So we have big structural problems that need to be addressed. But what I'm saying is we're on a trajectory that I've not seen very often, and it's accelerated, and you can see that in payments. Beginning to see that in securities trading with tokenization. This has got a potential to transform the way that industry is structured and who competes with whom.
I want to talk about tokenization in 1 second, but before that, I just want to ask you, across your universe of companies that you cover, who's making this transformation the best and who's making it the worst?
So who's making it the best right now? I mean, I would say DTCC. I mean, who would have thought 2 years ago? DTCC, for a lot of viewers, may not be familiar with DTCC, but every single US equity trade goes through DTCC, 50-year-old entity, trade, they clear and settle about $114 trillion in assets. That's more than world global GDP. DTCC is on the ball. They've actually taken, so each time our Schwab or Fidelity account executes a trade, the clearing and settlement happens through this DTCC. DTCC has just put the entire infrastructure on a pilot project till October on chain. That means we can potentially clear and settle trades, not in one day, but instantaneously.
That's nuts. How come we don't talk about this company?
It's the plumbing.
You do, obviously.
It's not exciting enough, Carol. Everybody wants to talk about the front end consumer facing stuff. And here's the irony: if you look at the consumer facing stuff, why are financial institutions catching up?
Why? Yeah.
Because consumers have woken up and said, "Look, if I can send email at any point of time." Right. Imagine if I said you cannot send email after 5 p.m. on a Friday because the email server is shut down.
Right.
Like that's unacceptable to you, right?
Right.
Crypto has shown us, doesn't matter what we think about crypto. The point is, it's shown us that you can trade an asset 24/7 instantaneously around the world.
So, crypto showed us that. That's value. But does then crypto? Let's just go there. Does that have?
You're talking about the tokens?
Yeah. Does it have a future?
Look, I cover crypto market structure. I'm not a crypto analyst or a crypto zealot by any means.
Yeah.
So the way if you might, I'll share the framework that I look at when I look at this space.
Yeah.
So we've got this underlying technology, blockchain and related technology. The first manifestation of that was these crypto tokens. That's what most of us woke up to when we thought about, blockchain. Any interaction directly with the tokens is pillar one of that infrastructure, right? There's still a lot of activity there. Pillar 2 is nothing to do with the tokens. It's to do with blockchain technology, taking traditional financial activities, payments, lending, borrowing, investing, insurance, just doing it on faster rails. That's pillar 2. That's where stablecoins, tokenization fits in. Pillar 3 is the Wild West, which is what decentralized finance is about. That is only on the fringes right now. That's a utopian world. It might be realized at some point of time. I don't think regulators and the public are going to allow that. That is no intermediary, everything intermediated purely by software, science fiction stuff. Yeah. Some of that is beginning to be real. There is a company called Hyperliquid that plays directly in that third realm. Today, most of the activity is in column 2. I completely get it. A lot of people, when they think about all this stuff, say, but what about Bitcoin?
Yeah.
And the discussion is got way beyond that.
I'm not a fan, as people who watch know.